So in this video we're just going to prepare a balance sheet. Now a balance sheet is a financial report that shows the balances of assets, liabilities and owners' equities at a particular point in time. Basically it's the accounting equation, assets equal liabilities plus owners' equity on paper as a report. So to kick off, it's very similar to your profit and loss statement in the title. So it's K. Fehlberg balance sheet as at the 30th of June 2010, and I'm just going to center all of that. And we get started. So the first step here is listing all of our assets. Now that's a big deal, so I'm just going to bold that and go through your trial balance here and find all of your assets. So inventories are an asset, accounts receivable. Now on the balance sheet we don't separate all of our accounts receivables into their individual debtors. What we do instead is just smush them all together into one accounts receivable. In the balance sheet, remember the balance sheet is prepared for like laymen, not accountants. They don't care who owes us money as long as we know that in total that's how much we're owed. Okay, so continuing, office equipment, shop fittings, premises. These are all assets. Now I can tell they're assets for two reasons. One, I read the words and I know whether that's an asset or a liability. Two, debits. Okay, so because they're all debits, I've got a pretty good idea that they're probably assets. Now I'm just going to fill in the numbers in my second column here. 40,000, 69,000, 18,000, 10,000, 8,000, and I've stuffed up. This is the nice thing about using a computer instead of using paper. Now after that I can find my total assets. Now that's going to be equal to the sum of all of these numbers. And we'll just underline this just to show that we've done some maths on that. Now after that we're going to take away our liabilities. So I'm going to do less liabilities. And as is the way with our accounting, I'm just going to italicize that one. And I might bold liabilities there. Okay, so assets are important, less liabilities. So our liabilities here are our GST clearing account, our mortgage on premises. Make sure you get your wording the same. That's it. They're our only liabilities. So 9,500, 4,600. Now I can add those together. Now I'm going to underline that to say that we did some maths on it. Now what we're doing is we've done all of our assets and we added them together. We're taking away our liabilities. So under here I'm going to do some more maths. I'm going to do this number, our assets, minus our liabilities. And we should get this number, whoops, we should get that number right there. Now I'm just going to do another line here to show that we did some maths. Now this number here is an important number. I'm going to bold that, and I might even put like that dollar sign here. And it's called our net assets. So net assets are just assets minus liabilities, and it's an important measure. Okay, so if you think about our accounting equation, remember that assets equal liabilities plus owner's equity. Another way to write that is assets minus liabilities equals owner's equity. So we've done assets minus liabilities. So now underneath this, we're just going to do a little owner's equity part. Okay, let's jump into that. Now we use this interesting word here called represented by, and you'll get a feel for how this works in a moment. Now our assets and our net assets are represented by owner's equity. Bold that. Now our owner's equity is represented by three things. One, it's represented by our capital, which in this case is $90,000. Now we add net profit. Now that net profit can probably come from your, well, it's given here, but it could also come from your balance, from your profit and loss statement. Oops. Now, where it says add, I'm just going to italicize that. Now, we're adding our net profit, which is $50,000. And then, I'm just going to add those together. So, capital plus net profit. And now, I'm going to say less drawings. Now, drawings are going to be, before I do that, I'll just get my line in there. Now, our drawings here are $9,100. And if I subtract one from the other, I get this figure here equals this minus this, which gives us this number. Now, it's an important number. Australian dollars, bam. So what we have here are two important numbers. I might just make this look a little more important, and we'll do the same here. Put something on the top there. Okay, so what we have here is called a balance sheet, and what we're doing is balancing our assets less our liabilities, which is our net assets, with our owner's equity, which is this number here. Now, just to make this a little neater, I might just take this and cut it and just paste it over here. Generally, we use 3 rows for this. Now, the convention that they use in the book is to use this second row here for adding up the assets and coming up with a number, getting rid of their liabilities and getting that number and adding that, and then doing the owner's equity here, capital plus net profit, that new number, less drawings, and then coming up with a number here. Okay, so that's a balance sheet. Now, it's going to take a little bit of practice here for you to remember how everything works, and it's not like a massive deal if you get the columns wrong, but you just want to use something that works. Okay, that's balance sheets. Give them a try.